Oh, hello, mic check, mic check, mic check. How's everyone doing? Can anyone hear me? It's been a while since we turned on the studio. Boy, has it been a crazy few months. I'm going to share with you kind of what I've been up to and whatnot. So grab a drink, relax, and let's talk about some Clover Health and some funny videos I want to show you. So let me just, someone comment in the chat if they can hear me. Can anyone hear me? All right, so I'm going to continue. Hopefully, I hear some people in the chat to see if they can hear me. All right, so it's been a long time. So today, for people that are unaware, Clover Health just had its 10-day of being over $1. And according to the NASDAQ compliance policy, we're compliant. Now, Clover would need to go under $1 for 30 more consecutive days. Then we would essentially get another 180-ish days to get back into compliance. Perfect. All right, Gunslinger. Thank you. Thank you. Good to see all of you guys. Now, if I look worn out, I am. I really am. I am worn out. It's been again, it's hard trying to become go through med school and trying to get into becoming a neurosurgeon. It's even harder. But we're making things happen and we're being productive. So I just wanted to share with you a couple things that I've been doing. I created this thing called the Global Neurosurgical Alliance. It pretty much spans every major continent. I have members from all over the world now that are interested in becoming a neurosurgeon. I found that it's unfortunate that you would have to go to a high academic output center for research to become a brain surgeon. And now I've opened the door to the United States to mentor these amazing people. Second, I went ahead and published a paper called Anatomic Parcellations of Brodmann's Area 4 and 6, a study on cortical thickness for improved neurosurgical planning. This is really important paper because it's literally published by the Mayo Clinic, the number one hospital in the world, and I'm first author. I went ahead also, got at least five abstracts accepted in DC and pending accepting approval to Howard University as well, about altered androgenic signals on epilepsy to design drugs and pathways to help with temporal epilepsy. And not just that, we did research on gender pay disparities. Again, these are all things I created. Artificial intelligence and machine learning on USMLE exams, anatomical parcellations of what you saw, paper from Mayo Clinic, and then addressing healthcare disparities in neurosurgical homeless patients. And then I forgot. There's more. I'm not going to bother you, but there's one more exciting thing I'm very proud of. This is a book that I actually written with my mentor, Dr. Martin Wine, neurosurgeon, regarding Marcus Aurelius's meditation adapted for the contemporary physician. But again, we're not all here for that. Just letting you know where have I been. I've been worn out, and on top of all that, I've been working 80 hours a week. So why are we here? Why am I making a video? So let's basically get to that. So first things first, let's go to our beautiful technical analysis. And well, actually, before we go to the technicals, I want to just talk to you guys kind of one-on-one here to just let's see if I can. So I want to talk to you guys one-on-one. All right. So check this out. Okay, I'm trying to put this in a way that doesn't offend people, but it is what it is, right? So if you go ahead and you go to Meet Kevin, if you guys don't know who Meet Kevin is, he's a YouTuber that rose to prominence during the pandemic. And if you were to look at his older YouTube videos, you could see he used to get 2 million, 1.6 million views. But now he's only getting around, 32,000 views, 40,000 views, 36,000 views. His view, 17,000 views here. Essentially, his views are dying down. Okay, and a lot of people are basically fed up, of all this nonsense that you're like, you know what, this guy's obviously making videos to make money on YouTube. You can see. I mean, look at this. I mean, you look at this guy. One video, 2, 3. So 3 videos in one day. And today he literally made 4 videos in one day. 4 videos, and these videos take time to make. So, you have to ask yourself, if someone's able to do 4 videos a day, for this long of a period for the past 3 years, what are they really? Are they really an analyst, or are they just a YouTuber? Now, why I say this is a lot of folks, I've read some comments on Reddit and whatever, like, where the hell did Albert go? Where did he go? Where the hell did Al Stock Trades go? The thing is, guys, I've been working hard, right? Again, the goal of creating this YouTube channel was to basically show you guys how to analyze companies, how to analyze stocks, creating the Mastering Stock Market course and the Stock Terminal to help people essentially know what an intrinsic value calculation is, and then be able to supply the data, which unfortunately has been ripped away from retail investors' hands, and give them insight on how to evaluate a company, which honestly, it's really hard to do now, given there's no free data. And if it is, it's not accurate. So the reason why I talk about this is because I have a video from this, and then we're going to be adding this to our stock terminal regarding updates. There's a show called The Compound. I listen to this frequently, and this guy, he's kind of the old Bubba. His name is Josh, and he says something very funny, and I want to share it with you guys before I start. I think you guys will get a laugh at this. Okay. So let's go ahead and let's remove this from the screen and see if I can do this, because I haven't done this in such a long time. So let me go ahead, share the screen again, but this time share tab with audio, and then here. Now, please let me know if you don't hear this. This is hilarious, guys. Okay, I'm going to go ahead and make it bigger, and then I'm going to mute myself, and then we're going to watch it.
Don't bet like that, right?
Put up these Home Alone faces.
This is great.
Who is this kid?
I don't know. So StockTwits.
Literally, the big Josh was like, "Who is this kid? Who the fuck is this kid?" Excuse my language, right? Who is this kid, right? And if you look at it, it's like, you have Graham Stephan posting these thumbnails, right? And I just want you to listen to this. This is what real Wall Street folks look at these YouTubers. They literally make fun of them. All right, watch, listen.
Did this meme, I guess. They showed 6 months ago. The headline is how to use the 2023 market crash to get rich. And it's this kid with his hand on his head. And then 5 months ago,
it's like a 25-year-old.
So a month later, why you'll regret buying stocks in 2023. And it's the hand is still on his head, but it's in a different position. Then
the hand's on his mouth.
3 months ago, the Fed just crashed the market, and he's got his hand on it's in a fist on his cheek. And then just yesterday, how to get rich in the 2023 bull
Josh,
market.
you know this guy. Y'all were co-stars in the same movie. Are you aware of that?
Was he in what movie was I in? The Netflix documentary?
Yeah.
Well, right. Oh, he was in This Is Not Financial Advice.
Who is this?
Who is this?
Graham something. He was
Graham
in it
Stephen.
too. He also talked to the Dogecoin. Or you didn't talk to the Dogecoin guy, but he talked to the
All
Dogecoin
right, so here's
guy.
the difference. He's not registered, like giving actual financial advice.
He is a YouTuber.
He's doing entertainment.
I'm just saying you're co-stars. You guys were listed in credits together.
Got it. Okay. Do you know this? You know this kid?
Not at all.
Okay.
Yeah. All right. So, okay. I just wanted to basically show you that, because a lot of people listen to this guy, and it's just, he literally says, don't buy stocks in 2023. And then if you look at 2023, let me go ahead and share the screen, the whole screen now. Let's see here if I can do this correctly. It's been a while. Screen one. Okay. So if you go ahead and if you would have listened to this guy, SPY 500, if you want to look at that year to date, the S&P 500 is 19%. If you go ahead and look at Apple stock, $3 trillion market cap, up 56%. Yeah, don't buy stocks in 2023. These guys are literally just, I laugh at them, and they're literally making videos every single freaking day. Like, come on now, right? So again, my apologies for not making the videos. But again, guys, I'm working 18 hours a day, right? But again, I do have the stock terminal, which I provide sometimes as my insight, but majority of the time is just the data where people can get access to. But let me go ahead and I just a couple things on the docket. We're going to go ahead and read this to you guys and kind of give you some insight of what's been happening. We predicted this bull market in the Sentimental Edge, where we basically talked about how let's see here, calm conditions for the month with stocks hitting new highs. And I said here, these conditions have a better record of persisting rather than ending soon. And this is in July 10, right? But again, we're going to go over this most recent one. Then we're going to go over the Smart Money, Dumb Money Equity Hedging Index. And then we're going to go ahead and look at the simple moving averages, do a quick intrinsic value calculation and what we can basically see for the future. Then we're going to look at the technicals, not on this order. We're probably going to do the technicals first. And then we're going to review what stage analysis is, as well as intrinsic value calculation. So we got a lot to talk about. Now, I want to go ahead and talk about the simple moving average because that is the biggest change that we've seen. Now, what is a simple moving average? So let's go ahead and just go over this. So usually, if you look at the 1980s and 90s books, they talked about this. And this is actually has tested the time, has really been accurate for quite some time. So this is the 30-week MA. I've talked about this many times, guys. This is another way of just saying the 200-day moving average. These little squiggly lines are the price actions. So you would want to get out of a stock technically from just a technical analysis perspective right around when it starts to drop below its 200-day moving average, especially if it's been rejected. And then you just want to wait. You want to wait until you get basically above the 200-day moving average, and then you see a support, and then we begin the bull market. Now, if we can go ahead and let's just kind of give you an example of a company that's done that. So if you look at Palantir, this yellow line here is the 200-day moving average. Now, I want you to just in your brain, or just, you don't even have to do it in your brain. I'll just combine two screens together. Thank you, Tim Cook, right? Or Steve Jobs. And let's go ahead and look at this. So here are the squiggly lines, and all of a sudden, the squiggly lines dropped. This is for Palantir Technology. Then we start to be in stage 4. We're in a descent, and we get to a point where all of a sudden, we get over this 200-day moving average where we're right here, and then look what happened. We shoot off and we rocket to the moon, right? And this is basically what this is. Again, this is just looking at the technical analysis, but you also have to have the fundamental analysis. Obviously, during this time frame, Palantir became not only free cash flow positive, but it basically said it is going to become net income positive as well. So by looking at this philosophy, you can basically see how things can change quickly. Within a matter of just literally a couple of months, the stock went from honestly, from as lows as what, $6 to $5 to $6, let's call it $6, to as the highs of $19, right? So if you go do that and you say 19 divided by 6, we're looking at a 3.16x your money, which is a 300% increase in your money. Okay, so let's go ahead and let's just make this bigger. So now that we understand how to read stage analysis, right? The stage analysis. Now let's go ahead and go to Clover. Okay, so now let's go back to Clover. And okay, that's not Clover. It'll soon be, right? So if you go look at Clover and look at the yellow line, once it passed the 200-day, it went ahead and did a nice short squeeze, and then it dropped back down. And since then, it has been literally, and we've been talking about this in the channel. I think I got on to Clover and started making videos right around here when I started to see this manipulation play into effect, where every time the stock gets near its 200-day moving average, it is literally attacked and assaulted. And it continued to get attacked and assaulted right around here. If you look at the news, it got attacked and assaulted, and it continually get rejected from the simple moving average SMA 200-day, right? And now we got to something important. As soon as it crossed a 200-day, it literally shot up really quickly, and now it's trying to consolidate. It's trying to basically see, right here, is this a true movement? Is this true? It just needs to close above and then make new highs to a point where we are like, okay, Clover Health has now entered a bull market. Okay, So that's what we're looking at right now. And this is the battle. This is the battle. This is literally what we're trying to battle out right now between the buyers and the sellers, okay, and the manipulators. Now, if you look at the short volume, which we'll make another video in the future, you can start to see its decrease as well. Now, another thing I want to make a comment to, right? I've seen a tick up if you go to here and if you type in the Clove. Now, I think I looked at one. If you look at all these, there's so many videos here now on Clover. Why is Clover Health stock going up? It's really amazing, right? It's so cute. But I don't want to sound cocky, but the Bubba's back, right? But there was a video I saw. The guy didn't know what the hell he's talking about, but luckily the commenters on the bottom was like, you don't even know what you're talking. So luckily for Clover Health folks, we have a lot of smart people that watch the videos that know what's been going on and that have been shareholders for quite some time. Okay, so now we're going to start to see an uptick. But what I've realized in the past couple of weeks, if you do type in Clover Health, and if you were to look at the news cycle, I want to see maybe if I type in Clove stock, not just the company Clover Health, you will see these little news regarding Clove. They're making this thing is like, should you sell on a Thursday? Literally, they're giving us days to sell. Clover Health, you should sell. Clover Health, you should do this. Clover Health, you should do that. And it shows you the manipulation they're trying to do to bring this back down. Okay. So let me just go ahead and let's just shift to the comments real quickly so I can move on to the next thing I want to talk about because I want to make this interactive. Okay. Glad to be back. Yeah, those YouTubers definitely are a joke. Captain Morgan and I are celebrating compliance. Hell yeah. And I'm drinking a Celsius because after this, I got to go do some research. I ended up catching norovirus in the hospital. So cheers to that. It's been great. It's been great working with the peds population. I'm on the pediatrician rounds. I'm inpatient unit taking care of children. Forgot I used to tell you what rotation I'm on. Let's see. The intrinsic value calculation is going to be the best. Bottomed out. Long Palantir. Al, hell yeah. Long time no see. I miss you too. Let's do intrinsic value. Boom, boom. Yeah, I know all these YouTubers. What your 1 year price? Okay, good. We'll talk about that because it depends on the growth. It depends on the interest rates. It depends on all this. Good to see you, Al. Hope the summer's been good. Absolutely. It's been phenomenal. It's been phenomenal. So there's the technical analysis perspective. So now let's go ahead and let's shift over to the stock terminal. Now, again, for folks that don't know, all you have to do is do /TA, type in the ticker symbol, Clove, and it'll basically automatically print you a little sheet that'll give you the last price, the first resistance level, the second resistance level, the support levels, the Fibonacci's, and most importantly, the 200-day simple moving average. We've been basically printing this every single goddamn day for the past 3-4 months, waiting for this to cross the goddamn SMA. All right. And it basically did. All right. So now we're watching that. So this is a little way of looking at things in terms of heat charts. You can see right now, where money is moving on from the day, and the way I like to look at it also from the S&P perspective is I like to look at it from the map to see where money is going. So why am I showing you this? Well, it's interesting because as soon as ChatGPT turned on, we almost hit a bottoming cycle in the stock market. And I believe the reason why is the stock market's predicting that artificial intelligence is starting to shape how we, essentially how we shape the future earnings of the next 10 years. And remember, the stock market is prognostic for future free cash flow outcomes. And what I'm starting to see and understand is that the market's pricing in that AI is going to make people so productive, and it's going to make the gross margins of companies amazing. And what you already know and what you've already been in is for time after time, a lot of these investors that got into Clover, AI is part of its mainframe, its machine learning algorithm. If Clover can design this specific ML with a large language model, it is going to revolutionize how physicians practice, especially in areas that are rural that really need the AI help. Okay. So we'll talk more about this, but this is going to be $1 trillion of market cap that AI is going to bring to all companies. The question is Apple, Nvidia, Microsoft, Google, and Meta, and Amazon going to be, and Tesla, of course, going to be the companies that are the AI, four horsemen like folks? Or is it perhaps that other companies will be able to sprout from this, like, for example, Palantir? Or are they going to get any company that shows progress is going to be acquired by, let's say, these big companies? So that's the battle. But we already know that Andrew Toy has a strong connection with Google and has already sold a company with Google and made all of his folks millionaires. Okay. So there's that. I just wanted to give that little answer. So now let's go ahead and look at the sentimental edge, and we'll look at the intrinsic value calculation. There's a lot of packed in this video. We have a lot of ground to cover. So overall, let's go ahead and zoom in. And again, if you want access to this, you go to alstocktrades.com and there's all the information you need. Okay. Now, here it is. Investor debt levels. Okay. So investors are taking on more debt, which basically reflects optimism that they are willing to leverage and capitalize for potential gains. This is a signal that is bullish for stocks. And historically, once margin debt increases, the S&P 500 was higher a year later. Now, there's been a lot of companies that I wish I can show you that have revised their outlook for the S&P 500 to end at around $4,600 to $4,700 this year, which is pretty amazing. The path to potential soft landing may happen. There's been a guy named Clear Value Tax. He's been talking about how there could be a recession. Again, we all don't know that. All I know is that 2025 and on, which is what we've been talking about since 2021, since the first time I talked to you guys, I've told you 2025 and on is going to be an amazing bull market, especially when you start to get into what AI is going to play in this endeavor. Now, if you look at investor confidence, there are multiple indicators that look at investor confidence, particularly the AA2 survey, which shows bullishness at its highest in over a year, and the University of Michigan consumer survey, which shows great optimism. Now, again, if you look at the FIX, which is the fear gauge, it being under 14, if you look at these indicators, all of them, the Wall Street Journal model suggests that we're in a period of extreme optimism, which hasn't happened since at least 1988. Okay, so now if you look at, so you could just go ahead and read this, pause the video and read it if you want, or go back to it. I'm just going to go ahead, and these are just kind of just reiterating what I'm talking about. There's something called the recession indicator. It's at 0.07. If it's under 0.30, it is basically bullish for the economy. If it's over 0.3, it's unfavorable for the economy. High beta stocks are outperforming. Again, Clover is a high beta stock. And then technologies obviously outperforming as well. And you can go ahead and read this. And then you can see this is some pretty good, valuable information. Now, interestingly, dumb money has been on top of this, and smart money is quiet. Now, this may be an indication that maybe smart money is trying to hedge and thinks that something's going to break and the Federal Reserve is going to have to break the economy before it drops interest rates. We'll see, right? If you go ahead and take a look at the equity hedging index, again, we usually, the way I like to read this is when it's in this negative territory, it usually is bullish for stocks. And when it's high, you really want to get out. As you can see, this was a great time to leave. But we're starting to approach highs that we were in when we're at the top back, I believe, on January 2021. We're starting to get to those highs. Okay. So there's that. What else do I need to do? Okay. Now, intrinsic value calculation. Okay. A lot of talking about here. Okay. So right now, Clover Health, for all people that don't know, they've decreased their revenue in order to get to free cash flow positivity. Why are they doing this? Interest rates are high. Not a lot of companies are trying to expand. So there's been a down revision in revenue in order to get to that free cash flow positivity because investor confidence was literally low. Okay. So because of this, I'm going to be, they're essentially growing at around 15%. Now, if you looked at Scott, which is a very valuable chief financial officer, he left a company that he took to free cash flow positivity to Clover Health. Now, why would someone do that, right? Obviously, he's not going to leave a cush job like that to go to Clover to fail, right? So that's a good comment to go ahead. I believe Belize makes that comment, and it's a really good, valuable insight, part of our Stock Trades platform. So there's that. Number two is if you go ahead and follow him, especially when he was presenting at banks, he specifically stated that once the economic forum lightens down and the Federal Reserve drops interest rates and the market for the stock, the stock market becomes more favorable, Clover Health is going to turn on the floodgates and is going to turn on the revenue growth machine that we're all used to. Okay. Then you're going to get a shift between value stocks to growth stocks. Now, what am I talking about? Well, a good company that I was looking at around $7-ish. I'll give you an example here. If you look at it, no one wanted this company back when growth stocks were high. And then when you look at when growth stocks fell, you can see that everyone started pouring their money in these value companies. When you calculate the intrinsic value and you look at the company, and this is up 144%. And what you're going to start seeing now is companies are going to start shifting back into I would say cash burning, right? But not cash burning, but maybe growth plus revenue increasing companies. Now, I haven't checked this. I'm just going to do it live with you guys. I'm curious. Yeah, you can already start to see Jumia, which is another company that's just a story company, hasn't really shown anything. But even before the pandemic happened, it was already trading at $40. So if we get to these types of levels, you could see how, this thing went up to $67, right? So we're going to get to that level of phase. Now, again, I haven't looked at Jumia's financials, so I'm not going to, talk about it right now. I'm just, remembering kind of the fusion frenzies of 2020 and how, people were crazy regarding the stock market. But what ends up happening now is once Clover turns on the growth machine, which I think is going to happen in 2025, it is going to shoot the company up, which we'll basically see in the intrinsic value calculation that I'm going to be doing right now. I'm just basically setting it up for you to basically try to give you quantitatively what's happening in my mind before we get to, or qualitatively before we get to the quantitative part of the analysis. So let's go ahead and let's, one more thing. Yes. If you go ahead and look at those meetings where Andrew Toy and the CFO were talking to these banks, Clover Health said that normally we were thinking of sprouting out to profitability from a high growth perspective. But we believe now we've shifted our point of view thanks to Scott, Mr. Scott, CFO, and obviously Chamath has been pressuring him, but they never listened to him. They kind of pissed him off in a way. And he said that they're going to be sprouting from a positive free cash flow. So they're going to start increasing revenue from a profitable perspective rather than from an unprofitable perspective, which means that they have a high probability. And I told you this, I don't believe Clover Health is going to be profitable in 2023. I told you this. I said that my calculation says late 2024. I believe Clover will be close to profitability to profitable in late quarters of 2024. Okay. And if you look at their outlook, it doesn't seem like it. But again, I could be wrong. We'll see. If they pull a Houdini in this next earnings report, which I see a lot of people speculating on, then of course this thing's going to go to the moon, right? But again, I don't believe that. I'm just, sorry, I'm not optimistic. I'm cautiously optimistic, right? But I know the reality of things. But if Clover achieves profitability in late 2024, which I believe they will, they are going to get so many investment pools that it is going to basically, so much money is going to flow into Clover. Okay. And then once the economy heals itself and then 2025 comes around and then Jerome Powell drops interest rates down to, lower than what it is now in the federal funds rate. And then all of a sudden, Clover, from a profitable perspective, jacks up its revenue to 40, 50, 55%. And you saw how much it grew. It grew 100%. If Clover can do that from a profitable perspective, ladies and gentlemen, we're going to have a bunch of millionaires, right? Especially in our form. This is how it works. Okay. So now let's go ahead and do an intrinsic value calculation. Again, if you want access to this, there'll be a link down below, or you can just go to alstocktrades.com and you can basically see for yourself. Okay. And we do have payment plans for people that are interested in. Okay. And again, this is not, something, I'm not trying to push this onto you guys. Again, I'm going to be a physician. All the money that I get gets reinvested back into the business to basically supply the data and everything that costs. All right. So now let's go ahead and we know that, hello, let's go ahead and we're good. All right. So let's go ahead and put 2000, which is $2 billion. Again, these numbers are in millions, and let's do 5%, right? We're going to take 5% to estimate the free cash flow. Now, if we go ahead and do that, and again, this is assuming it's a normal company. If it becomes a SaaS-like company, and if it becomes like that, then we're going to be able to evaluate this at 15 to 20% or 17%. But again, we're just going to be very conservative now and do 5%. By doing that, we're going to just drop the free cash flow. Let's drop it here in 100. We're going to go 10 years into the future, which you can go up to 2032, and we can update the numbers here. It's just that's what it does, even regardless of what the numbers say. I need to update it here, but the calculation stays the same. But now they're growing it around, let's call it 15%. By doing that, and we go ahead and do 477, let's call it million shares. You can see that a recession level of Clover is $2, right? A bear is $3. And then a base is $4.91 and a bull is $6.87. This is assuming that they're going to be a value company and they're just going to basically grow 15% for the rest of eternity. We know that's not true. We know that they had a higher revenue last year of $3 billion, and we know they're going to wrap and increase it. So this is just assuming at today's value is what it should be. And if you look at SoFi's negative free cash flow. Why the hell is it trading at a higher level, right? Why the hell is it trading at a higher level, right? Because people know this company, right? It's trading at $9 billion, right? But it's very negative free cash flow now, right? So it shows you, and if you look at the year to date, it's up 112% versus Clover. Again, it's still under the radar, only 18%. Pretty damn good, right? But still, right? So, we could do honestly a discount rate. Let's call it discount. Let's say I want to make 18%. If we make 18%, Clover would need to be $2.86 to make 18%. So, obviously it's still undervalued from that perspective. If you don't know what I'm doing, I'm going to be teaching this. There's multiple ways to use this calculator. If you go to let's say I want to make 40% every year. That means I would have to buy Clover at 91 cents to make 40% every year, right? Guys, that's amazing. 40% every year, right? Usually once a company becomes free cash flow, it just shoots up, right? Well, let's bring it back to the base 10%. So now let's assume it's 2025, okay? It's 2025, okay? And Clover's free cash flow positive, and they just started to increase their revenue, and now they're growing at 45%. You put 45% here, and I want you to look at the bull case. Now Clover's at $55, okay, with a recession of 11, a bear of 25, and a base of 36. Now, if we're in a really, really great bull market, Clover at $55, ladies and gentlemen, that's 55x of where we are right now. 55x. So let's assume we put $100,000 in Clover at $1. And then we sell it at $55. That's $5.5 million. Okay. Let's assume we put just $10,000 in Clover at $1. That's $500,000. Assuming we put $1,000 in Clover, that's $55,000. Okay. So how many shares? It depends where the price goes. If it's like $10, then I think 100,000 shares would get you $10. 100,000 shares will get you a millionaire at $10 in a way, right? But the calculation is, I think there's a nice online calculator that does it for you. But overall, and if it, let's say, for example, if it grows to 75% or how it used to grow, then we can start seeing how far it can jump. Now, again, listen, if they do post 75%, let's say in 2025, and the stock does shoot up to 150 or 217, you have to understand 75% growth rate for 10 years is unrealistic. That's how you know you sell out, because it's going to come back crashing. And what you do is you hold, what you do is you sell out and you wait till it goes back to its actual intrinsic value. And then you buy it, because what happens is when the stock goes up to 150, people are selling it as it is 2029 or 2030. They're pre-pricing in the price of what it's going to be in 5-10 years. And what ends up happening is people buy so high that they end up becoming bag holders for 5 years. And then they have to wait for the price to get at where they bought at originally. Think, for example, Palantir, right? So I hope definitely this was helpful. Let me go ahead and go through the comments real quick. Yeah, so you called the 2023 bull market. You are legit. Yeah, exactly. We went ahead and called it, and that's just how I in one of my videos. And yeah, and again, I don't make a lot of videos, right? Because again, my livelihood is not YouTube. Now, yeah, you can see I have a great setup, right? But again, this is a hobby for me, right? I want to teach. Again, if you look at the quote here, it's educate, stimulate, and inspire. Okay. This is who I am. And for all those other YouTubers that it's obviously that's their job, right? Yeah. So that, I don't have to say much. You guys already know who these people are. All right. Good. Let me go here. All companies will be able to create large language model. Okay, good. Exactly. Proprietary data is a moat. Will they able to? Yeah. So United Healthcare could definitely do this, but again, there are about 10,000 Americans turning 65 every day. There's a tsunami of old people coming, and there's Clover Health is just positioning itself to basically capture that, right? For all the physicians that are watching this, glad we're all back together and learning. So it's interesting because, and this is sad. I don't want to break this. You already know this in the back of your mind, Brad. When United Healthcare started or other companies started, they usually start out innocent. Clover in the future will become, if it does get big, will it continue to keep its mission? Historically, based off of what I've seen, the answer is no, right? It's just how capitalism works. But if I'm wrong, I wish I am. But that's just kind of how it works. So insurance companies at the end will historically get to their the way they're made, the way they made, which is to make money, right? Now, good reverse split. Thank you. I knew I was missing something. So now let's go ahead and talk about reverse split. All right. Now, personally, do I have a problem with the reverse split? You guys are gonna call me crazy, but no, I don't. Right? If you look at Citigroup and all the other bookings, again, it's all about fundamentals, right? If a company is positive free cash flow, positive net income, just like what we teach, at the end of the day, it doesn't matter. It's going to go to its intrinsic value. Now, personally, why I would like a reverse stock split, well, it'll be over $5, and institutional investors are more likely going to invest in it. There's just kind of a filter they do. Any stock under like $5, they don't even look at it, right? So it'll bring about institutional investors, number one. And number two, a lot of people that don't know anything about stocks, they'll probably sell, which will give us even a more of a better opportunity, right? So there's that. But overall, based off of what Andrew Toy said in his last earnings call, he said that if we run to compliance, then we won't even need to do a reverse split. But then he filed the pre-paperwork. So there's only two ways this goes. He could say, hey, we just filed it just in case. So there's no delay in compliance. Since now we're in compliance, which is today, congratulations, right? Then perhaps we don't need to basically do that filing, and that's great. Or maybe he just changed his mind. He's like, screw it, I want to split, right? But we'll see. We'll see. Okay. Absolutely. And then once we have that, we'll, if the millionaires would be kind enough, if you in the future step up to be on our website, that'd be really nice. Just realized we are live. Yeah, I know, right? Nope, we're definitely live. Yeah, we're going to calculate that. SoFi has been improving fundamentals. I need to look at them again. I've been definitely out of the gap. I do believe I did look at their gross margins. I think I was like, wow, yeah, I do agree. I need to look at it again. Watching for Clove to continue to improve in MCR and increasing lives under management. Exactly. They decreased it in order to get to that profitability. Yeah, some of us know or will know what it feels like to be bag holders for 5 years. That's why it's crucial to learn as we go. Learn from our wins and learn even more from our missteps. Absolutely. And that's where you win the most is when you lose. And it's a lesson, right? That's why we read books, to try to learn from other people's mistakes. But the best lessons, just like a vaccine, it's always the actual illness to get you that, those memory T cells lined up. If I'll then pivot into affordable housing. Exactly. Institutional investors, steady gains. Absolutely. Filed it and stated that they recommend the RS. They sent out voting proxy for the split. Yeah, I saw that. What do you think about the future share dilution? That is okay. So yeah, we just talked about that. Big part of SoFi coming back is exactly the student loan forgiveness, the Biden administration, that they said, you know what, we're no longer going to go ahead and delay it. And it was in one of the laws, I believe in one of the laws they passed, where Biden had to agree and sign it. Honestly, after being here for 2 years, I trust the management and their strategies. Yeah, exactly. You can see that, again, they're heavily invested in this company. And if this thing goes bust, no one's really going to trust them. So they'll lose credibility, especially, Andrew Toy wouldn't take the throne, and Scott, CFO, wouldn't take it as well. And again, looking at, we're all making assumptions and our own intrinsic value calculations in our mind. But again, we already know there's going to be a lot of patience in the future, especially over 65. So we can kind of have an inclination. Again, this video is 42 minutes long. Holy freaking moly. Hence why I got an energy drink. That was a lot of information. That was a lot. We literally went through a lot. Now tell me something. Have you seen a YouTuber do that? If so, please comment down which ones. I would love to definitely watch them, right? But overall, it's always a privilege, guys. And I hope this video makes up for all the videos that we haven't made. And again, I don't want to bother you guys and make stupid videos that just waste your time, right? This is, I want to make videos that are important and not waste your time. And again, 42 minutes, that's a long time. But again, a lot has happened that I wanted to catch you guys up on. I think that's all I have to say. I'm just going to basically file in to see. Oh yeah, there. We'll leave it off with this. Again, the black line is the stock. Most folks buy when it's overpriced. We like to buy when it's underpriced. And that's how intrinsic value calculations work. We found the value of the company. The intrinsic value, sorry, my apologies. The blue line is the stock price and the black line is the intrinsic value. Most folks buy up here. We like to buy when it's down here. Okay. And that's all I have for you guys. Hope that was helpful, and I will see you on the next one. And then thanks for being prudent with your videos and communication. Absolutely. God bless you all. I'll see you on the next one.